The gold prices, which have steadied above the $1450 mark after suffering a third straight day of decline in the morning today. Prices edged back on back of physical demand from China and other Asian currencies as gold imports hit a record high. A global equity rally and a drop in SPDR ETF holdings hitting a 4-year low capped gains in the precious metal space. There you have MCX in the meanwhile holding more than 0.5% of strength in the European session. It's a choppy day of trade as far as crude prices are concerned. After holding above $104, Brent crude has fallen below that mark. NYMEX crude was also trading under pressure from inventories increase but is trading slightly positive right now. The pressure though is expected to continue as the IEA cut NYMEX Brent forecast to $93 and $105 respectively for Brent as well. And OPEC also came out with a statement that the output outside OPEC is to increase 2.1% in 2013. Joining us on the show is Vandana Hari, Asia Editorial Director, Platts. Vandana, hi, welcome. The gap between NYMEX and Brent seems to be widening as high supplies in US on one side and supply threats on the other side from Syria are supporting the prices. How do you see the fundamentals now impacting prices?
Yeah, we did see a slight widening of the Brent premium to NYMEX crude, especially on Monday. When we saw it go up to a little over $10, which was a 2-week high. But then subsequently in Tuesday's trading, what we've seen is as Brent prices came down, the premium has narrowed once again. And as of Wednesday morning, it was sitting like just about around $8.50. So the longer term picture here is really that we have seen this spread crunch quite significantly since the start of this year. We had seen highs of nearly $18 and last year even $22. And this has come in much below $10 now. The main reason being that the poor economic sentiment caused by all of course, the continuing problems in Europe, but also a little bit of weaker economic data out of the US and China has weighed much more on Brent prices rather than WTI prices. Going forward, the expectations are for this premium not to expand significantly. I think we should continue seeing it around $10 or so for the next few months.
Let's get in our experts, and joining us on the show is Vijay Bhamwani, author and CEO, BSPLindia.com. Also joining us is Mr. N.S. Ramaswamy, who's head commodities, Ventura Commodities, in the studios itself. Mr. Ramaswamy, hi. Let's start with you first. And what's your sense now coming in for the energy sector, the crude prices firstly?
Basically, crude last week or even 10 days back, what we saw was after the expectation of the non-farm payroll from US, that gave a very positive hope, and that was a trigger where we witnessed a very good trigger towards the price movement, breaking out above $92, $93 and then regaining itself to a level of close to $95, $96. So we expect the trend to continue because today we saw the Chinese data as regards the imports and exports and the trade surplus has given some hopes. And today we have the data of the stocks, US stocks, which is also likely to be expected to increase by 1.9 million barrel. But then if you were to see yesterday's API data, which is as against the expectation of around close to 1.8 million barrel increase, the increase was only close to around 0.7 million barrel. So probably the market is actually watching on the stock to be released today. The price wise, if you were to say, I would see 93.50 remains to be a very good support levels in dollar terms, and with that as a cue, one could always be long in the position of crude. If you had to talk of the MCX counter, we recommended a buy in the May contract above 5175. Currently prices around close to 5185. We expect the levels of on an intraday basis likely to see 5225, or in dollar terms we also expect close to $96 on an intraday basis.
Sure. Vijay, what would you say about the natural gas prices? Today has been a very flat day, but we have come off the kind of highs that we have seen it trading within.
Manisha, I would maintain my view that energy prices are likely to remain under pressure and upsides are likely to be fairly capped. I talked about 218 to 212 range on the downside. We are fairly close to the lower end of the range. If 212 is violated fairly forcefully, 212 being violated forcefully will indicate a possibility of even 206 to 208. I'm not really keen on buying natural gas at this point in time. As a matter of fact, give me 218 or 19 and I would feel comfortable comfortable shorting it at those levels, because there is an overhang of unwinding of long positions at high levels, and this overhang is very, very palpable. I'm seeing the screen showing signs of weakness, and unless that weakness goes away, I'm not getting into the long side.
Mr. Ramaswamy, what's your sense now coming in for the base metal prices? Because they have really surprised on the upside. 2% of gains coming in for MCX copper right now. 400 has been quite clearly taken, and that pretty much is the case across board for all the base metals.
Manisha, German industrial orders have also been positive. US non-farm payroll has been positive. Chinese data which has come up is also again giving a good hopes. And this being the case, you could see the trend in the Shanghai and the LME stock. The stockpiles are slowly depleting, in the sense all this while we were talking of surplus, and slowly it has started to indicate that the drawdown is happening. So we expect copper prices to move from these levels of around close to 401, 402. We expect levels of close to 407 to 409, and beyond that we also expect the range to be now upside. The support levels would now increase to close to 395, and the above resistance we expect around 410. So one should try to look into the positive side of base metals and go long in copper. Same is the case with nickel. We expect close to 843 to 855. So in the base metal pack, copper and nickel looks to be good from the current short-term view also.
Vijay, we have been talking about the base metals for many days now. What's your pick coming in today?
Manisha, I've been advocating bullishness in nickel and aluminium. I'm happy to see 2% of an upthrust in nickel, 1.5% upthrust in aluminium, where the levels that I talked about, 813 to 815 being a support on nickel, I had long positions there. The closer it gets to 840 odd levels, I would start to unwind some long positions, although partially rather than square up my entire open order book. At 844, 845 odd levels, I would like to see how the bulls are able to sustain the upsides, whether the exuberant buying momentum which was seen at lower levels is sustaining or not. If it doesn't, I might just square up all my long positions at 844, 45 levels.
Alright, so for the near term though, some gains coming in there. Mr. Ramaswamy, also about the precious metal space, how would you look at that? Because that has been very, very choppy. Though keeping within its ranges, we have seen some declines and some opportunity buying coming on the lower sides.
Basically, if you were to talk in the bullion gold, there's a tight physical market which we have witnessed. Barring the equity performance, the stock which has been the negative for gold, the performance of the stock markets and probably the ETF holdings which are actually at a 4-year low, those are the one negative factors at the moment currently on a very short-term perspective if you were to see. But we are expecting the range between that 1440 and 1487 to remain intact, and now we are witnessing around $1461 in gold. We could see probably an upside from here onwards to 1464 and beyond that to $1470. In dollar terms, in rupee terms, we are expecting levels beyond 26,800. We are expecting levels of close to 27,100, and with a stop loss of probably 26,700, one could play long on gold. We are expecting this range to happen, and even if you were to see the Chinese data and the imports, net imports from Hong Kong, which they did was of close to around 97 tons in February. Now that has steeply increased to around close to 224 tons. So this is indicative of how probably an Asian demand and the physical market could take gold further to a short-term high.
The sugar prices have edged up today on bargain buying, driven by hopes that bulk consumers would increase purchases at lower levels, though the supply pressure has restricted the upside. Also, due to the LBT strike, there have been reports of sugar sold at even 40 rupees per kg in certain parts of Mumbai. To pulses then, where chana futures fell due to arrivals from the new season crop and estimates of higher output. The chana output is expected to be 8.49 million tons in 2012-13 as per the Farm Ministry's third advance estimates, as against 7.70 million tons a year ago. In the edible oil space then, the oilseeds and soy oil futures rose following gains in the overseas markets. Though weak export demand for oil meal has been weighed onto the sentiments, supplies of corn and soybeans in the US are the tightest in last 9 years, and farmers are holding on to what remains from last year's harvest in hopes of price rise. To grains, where India's May 1st wheat stocks at government warehouses surged more than 76% to 42.7 million tons from the month of April, as per government sources today, increasing pressure on the world's number 2 producer to boost exports and cut down huge stockpiles. Government uses the stocks to distribute cheap grain to its 500 million poor people and also hold some in inventory as a buffer for emergencies. The government is trying to expand the subsidized food program but is yet to pass the bill. And in the meanwhile, you also have to look at the India's rice inventory on the the 1st of May. It was standing at 34.7 million tons as against 35.5 million tons in the previous month. Vijay, what's your sense coming in on the charts now? How is wheat looking?
Manisha, I've been maintaining that the 1530 high which was made in the May futures is the top. I don't see wheat prices going up from the current levels to test the 1530 again. Although the reports of proactive efforts by the government to rope in private traders to help out with exports, reducing the floor minimum price from $300 a ton to $276 a ton have been in the public domain, but exports aren't really as vibrant as the government or the market watchers would have expected. So my guess is wheat prices are likely to drift lower rather than simply collapse, of course, because you are looking at the possibility of the passage of the food security bill, which will mean that a whole lot of social entitlements will be allocated from the buffer stock that we hold. But as far as an investment is concerned in going on the long side, I think it would be a perfect example of what not to do.
Vijay, also, what's your sense coming in for the sugar prices? Because while we have seen good gains coming into the futures and the spot markets as well, there of course has been a lot of various prices being quoted into the spots.
Manisha, I've been bullish on sugar. I've maintained that the peak of summer will see a revival in the sugar prices in the financial markets, because the future prices are, in my humble opinion, mispriced. I think what is not being discounted in the price is a very pronounced drought-like situation which is likely to impact cane prices. Let's also not forget the crushing season starting from October 2013 has promised a 27% markup in the FRP. So if you were to calculate and build all those factors into the prices, and the fuel prices have been cut for petrol, not for diesel. Diesel is likely to either stay firm or likely to rally from here. So I think sugar prices in the farm month futures, especially July or beyond, should provide a good example of above average market returns. Something like what we saw in wheat, which we started recommending in January. At that point in time, wheat was fairly sluggish. The prices were not going anywhere. I see similar chart patterns in sugar and even chana. I think both these counters provide good investment opportunities for a serious-minded futures trader who wants to dig his heels into the market and can fund his positions both on the span margin front and on the mark-to-market front.
The Indian rupee closed the day on a very flat note. While the domestic equities gained momentum and there are positive cues on capital inflows, there also was support from strength in euro versus the US dollar. The rupee instead was under pressure due to political concerns in the country. There you have very flat moves coming in. 3 paisa on the lower side is how the rupee shut shop today. Joining us on the show then is Manish Sahanawala. He's Director Greenback Forex Services. Manish, I welcome. What's your sense that you make of the rupee now? Because most of the fundamentals were on the positive side, but even then we didn't see rupee react to all of that.
Well, I think a very quiet day for the rupee, and of course lack of volatility is probably not very good for most traders. But I think we had the election results out of Bangalore or Karnataka today, which the Congress really won by a huge margin. Now they are going to be forming the government there. So given that, I think the focus again moves back to the center, where we are expecting elections in 2014, and the market is really confused now as to how the elections are going to swing. So typically we have seen an anti-incumbency vote going through. So we saw Congress win the BJP states and BJP claiming back, except Gujarat, some of the Congress states, which clearly says that there could be turbulence at the center. So I think the overall market gets worried about political uncertainty, and though other things being positive for the rupee, the political factor kicked in, and we had a situation where the market probably thought at best to keep it range bound and think over it a little more till tomorrow and then take a directional call there.
Vijay, getting you in the conversation as well. What's your sense now coming in for the Indian rupee, and what range would you work with for the markets tomorrow?
Manisha, the 53.80 level which I've been talking about since the last couple of weeks remains in place on the currency derivative segment in the May month futures. I don't see the rupee appreciate beyond that, and as a matter of fact, I'm seeing signs of the dollar gaining strength, although in a stealth mode rather than any kind of exuberance, because all kinds of rupee positive news triggers are being discounted by the market without any commensurate strength in the rupee. And here you have the US dollar index, which is now firmly entrenched above the 82 levels and heading higher towards 82.60, 82.80 levels. I think the rupee runs a serious risk of unwinding on the long side, and the buy dollar sell rupee trade might just re-enter into the mindsets of the traders.
All right, so that's the view coming in for the currencies as well. With that, we'll let you go, Manish and Vijay as well. Thank you so much for joining us. With that, completely out of time on Hot Commodities. Thank you for watching.